fashionable. Fog scent. New fashion wear for men.
Good afternoon. Thanks for tuning in. You're watching Ask PQ on Bloomberg Quint Live, and I'm Navneet Saluja D'Souza. Well, this is the show where we address all your stock queries. So you can write to us on Twitter, Facebook, or just call us on 022-4540-4141. You can also mail us your queries at askpq@bloombergquint.com, and we'll try and address as many as possible on the show today. But do remember to add the AskBQ hashtag. Well, before we get to the individual queries, here's a quick look as to what's happening with the markets today. Some respite after 6 straight days of losses that we've seen for the markets. We had a gap up opening that got sold into, but mild bit of recovery from those lows of the day has been seen as we speak. Nifty still below the mark of 10,200. Remember, if you look at the options data, the bulls and the bears have been fighting to protect the 10,200 mark, but as we speak, 45 points higher for Nifty, and in fact the bank Nifty, which slipped into red, has seen some buying coming in at lower levels. So I don't know, it's buying or some bit of short coverings, because not to forget, most of your PSU banking stocks have seen a lot of fresh short positions which were created in the past few sessions. So maybe it could be a short covering bounce. So Bank Nifty is up 120 points. The gains are being led by the Nifty PSU banking index, which has seen gains of nearly closer to 1% as we speak. So 1.1% higher for Nifty PSU banking index. With regard to broader markets, they have been underperforming the benchmark indices, because both Nifty mid cap and the small cap index currently trade in the red. If you could just pull up the market breadth, I think that's going to give you a clear picture as to what's happening with the broader market. So as you can see, it is still in favor of the decline. So some bit of respite for the benchmark, the large cap stocks, but not for the broader markets on the whole. In terms of sectoral indices, we've seen the Nifty Pharma and the Nifty FMCG index. Both of them have seen some losses coming about, whereas on the gaining side, IT continues to support this market. So Nifty IT as well as the Nifty PSU banking index, as we highlighted, are one of your top sectoral gainers. Let's just pull up the contributors list among the Nifty constituents, which throws a picture as to which are the stocks which are contributing today. So your heavyweights like Reliance, which was trading weak in the past few sessions, has bounced back from those lows. HDFC, ICICI Bank has snapped the losses that we've seen in the past few days. ICICI Bank has bounced back today, and Infi is also contributing. On the flip side, stocks which are dragging the index lower today, Yes Bank is one of the top losers. Remember, from the start of the day, we've seen some losses coming about. Yes Bank has seen cuts of nearly 4 to 4.5%. Sun Pharma is down nearly 2%. HUL and IndusInd Bank are a couple of losers in today's session. But in terms of investment themes, the pockets which are not doing well, sugar stocks. Today is the third straight day when the sugar stocks have seen a sharp fall coming about. So look at Balrampur Chini. Not to forget, that's in the futures and options market. Huge amount of shorting has been seen there. You've also got stocks like Uttam Sugar, Awad, Dalmia. I'm just highlighting few stocks, but the entire pack is down. The reason for the sugar stocks to correct is that ISMA has said the production for the sugar season is up nearly 45%, which has led to correction in the sugar prices, which means that these sugar companies are selling below the cost of production, which will lead to losses in the quarters to come by for them. The other pocket, Adani group of stocks, third straight day of weakness seen. Adani Transmission down almost 10% now. Adani Enterprises, Adani Power, all of them in the red, I guess. But some bit of positive tick was seen for Adani Ports, which is a Nifty constituent. Just want to highlight few gainers from the broader markets. Bhushan Steel has been gaining since morning. Call it a dead cat bounce, because yesterday Tata Steel informed the stock exchanges that they have been informed they were one of the top bidders for the plant. Bhushan Steel currently trading with gains of 12%. Fact, that's a chemical company. Second or the third straight day where the stock has been locked in upper circuit, and what a bounce back Aegis Logistics has seen after a fall that was seen in yesterday's session. So Aegis Logistics currently trades with gains of nearly 7%. Well, that's about the markets, but on that note, let's get going. and get in our two experts of the day. We're joined by Thakkar of Anand Rathi Financial Services, and also joining us right here in the studio is Avinash Gorakshakar of Joindre Capital. Good afternoon to both of you gentlemen. Appreciate you joining us today on Bloomberg Quinn. Well, let's take our first query, and that's a caller. We're joined by Mr. D.N. Singh, who's calling us from Mumbai. Hi, Mr. Singh. Thanks a lot for calling us today. Tell me what's your query on.
Yeah, ma'am. Actually, I just wanted to take a view on USL,
Okay.
United Spirit. I bought it on 3195. So, what could be the long-term perspective? Should I keep it or should I exit?
Okay, what's your time horizon, Mr. Singh?
Maybe 2 years.
2 years. And could you tell us when did you exactly buy these shares?
3 months back.
3 months back. Okay,
yeah.
that was the time actually when the rally started. I remember the rally started, Avinash, from the second quarter earnings, which were good. Third quarter was a bit of dampener, or call it a one-off, which the company mentioned. But what do you think he should do? He's got 2 years of time horizon, and we've seen some bounce back in the liquor stocks in the last 1 to 2 years. There are a lot of reasons. Premiumization theme, which they've been focusing on. A lot of states have also agreed to hike the prices. But I guess the recent dampener was the increase in excise duty in Haryana. But I don't think United Spirits gets a lot of its revenues from that state.
My sense is, I think, if the investor has got a 2-year view, he should hold on. I think clearly United Spirits is largely, serving the higher end of the market, and with the kind of product launches expected from Diageo also here, I would believe that, in terms of margin expansion as well as the IMFL space, I think they have a well-positioned market strategy. In the near term, it's a regulated business, so any negative news flows has an impact on the liquor stocks, and that exactly happened a couple of days back. But going longer term, I think there is a huge amount of headroom which the company can cover, and I think the kind of competitive kind of positioning the company has got, I would believe that probably in the next 2 years one could see a very strong reward here. So probably just hold on, but I think in the short term there could be a little bit of volatility.
Right, Avinash, we'll have a GST meeting coming about, and alcohol and petroleum products so far have been kept out of the ambit, but there are talks that alcohol or liquor could be included in that. If that comes about, I'm asking, what would be the impact on these stocks?
See, I think frankly, Navneet, in the short term it could be a dampener, but longer term, I think clearly GST is going to be positive for the industry, and I think that would obviously be a pass through. So clearly in the shorter term, you could expect a negative impact on most of the liquor stocks if GST does come in for liquor. But overall, I would believe that within the branded space, this is one company which can actually deliver very strong returns, over the next, say, 18 to 24 months.
All right, Mr. Singh, as Avinash is suggesting that you can look to hold on to United Spirits considering your time horizon is 2 years. The stock's come under pressure. It's down nearly 2.5% as we speak, and it's also slipped below the mark of 3,000. Remember, start of this year, we did see the stock touching the mark of 4,000 as well. Well, let's move on to our next query of the day, and that comes from Sounder M, who writes to us on YouTube. He's got 6,500 shares of Make Money Organics, which Sounder bought at a price of 63 rupees. He's got a short-term view. He wants to know what should he do. Let's check what the current price is right now. He's bought at 63, and I guess, okay, he's pretty much in the money, 85, and that's a good entry level, Sounder. I think the stock did touch those levels of 120 recently, but it has corrected from those levels, and keeping in mind the markets too have corrected from the top. Jay, I'll come to you since it's a short-term query. Should he be booking profits considering the markets are volatile right now? He can just put a stop loss.
Hi, good afternoon. First of all, I would say that 83 should be the stop loss if at all someone is really looking out for the short-term view. 83 is the recent low that's been made. In fact, today's low is 81.60, but I would then to suggest that 83 on a closing basis should be a stop loss if that holds on a closing basis. And I think this stock can again bounce back to the levels of almost 94. Hence, one can see some almost say 10 odd % move on the upside from these levels, as market is also reversing well from the 200 DMA and is taking good support out there. So if at all there is some good bounce back coming in market as well, then it will support someone and support most of the stocks, and we'll see the bounce back coming in major of the stocks which are quite beaten down, and this is one of the stocks which has seen heavy selling from the higher levels. So I think minimum retracement level also comes to around those levels, that is 94 also. So it is 83 as a closing basis stop loss, continue to hold it.
Okay, so keep a stop loss around the mark of 83 as Jay suggests, and Sounder, you can look to hold on to make money organics. Let's move on to our next query. We've got another caller. Srinivas Rao is calling us all the way from Hyderabad. Hi Srinivas, good afternoon to you. Thanks a lot for calling us. Tell us what you want to know from our experts. Okay, I think we've lost the line of Srinivas. We'll try connecting base with him again, but we'll try and look at some more queries which are coming our way. And I think we had a query coming in from on AU Small Finance. I think Aksh had written to us on Twitter. He had 150 shares of AU Small Finance Bank, which he bought at a price of 640 rupees. He does have a long-term view, and Akash, pardon me for the name, Akash wants to know if he should hold or sell. Avinash, a recent listing, I think in July 2017 was somewhere AU Small Finance Bank listed. 640 is where he bought. Can we just pull up the chart and see where currently AU Small Finance is trading? So it's slipped below his buy price. What do you think he should do?
No, I think AU Finance Bank should definitely do well over the medium to longer term. You know, if you take a longer term perspective, I think they are already very strong on the SME as well as the MSME segment space. And with the bank getting, an SFB bank license, my sense is over the next 2 years, there could be some amount of margin pressure in the short term, considering the kind of migration to the SFB. But overall, I think the business is definitely growing. The asset quality is pretty stable. So I think keep a slightly longer term view, at least 18 to 24 month view, and I think you'll have to give it some time before this bank actually delivers on the numbers, because in the near term, the markets are obviously getting a feel that probably the conversion to the SFB would mean that some amount of compression would come in on the operating levels, on the operating costs, which obviously in the shorter term which the bank would have to bear.
So you're suggesting him to hold on? Or?
Yeah, he should hold on.
Okay. Okay, so hold on to your investment into AU Small Finance. We're getting a lot of your live queries on Facebook and Twitter. I'm going to just go across to the Facebook queries. First, Akshat Maheshwari writes to us. Akshat bought 1,000 shares of Man Infra at 74 rupees, and he has a good time horizon of nearly 4 years. He's asking what he should do. Well, another construction company, but it is pretty much diversified. Correct me if I'm wrong, Avinash. It's into port infrastructure, residential and commercial projects. What do you think he should do? 55, bought at 74.
I think again, I think clearly in this kind of business, one has to take a longer term view. But yes, the business mix is pretty solid. I think port infrastructure, plus they have a fair amount of residential projects in Mumbai. So probably, these projects should start contributing, especially the residential piece should start looking up from FY19, second half onwards. And probably, that is one piece which could give a very big trigger to the earnings. So keeping a FY20 kind of perspective, I think the stock should be held on to. Maybe in the short term, the earnings growth could be a little lumpy, but longer term, hopefully, if one were to invest for the next, say, 18 to 24 months, I think he should get a decent risk reward.
Okay, and besides Akshat, I guess even Manu M had a query on Man Infra. Manu, as you heard Avinash giving his views on Man Infra, he's asking actually from around 2 years, should he make a fresh investment?
I think if he can hold on for the next 2 years, because these companies would not give an immediate upside.
Okay.
You will probably get to see a little bit of run up only from the second half of FY19.
But does it warrant a fresh investment at these levels?
Around 50-55 definitely. I think if the investor has a long-term view.
Okay, Manu, if you have a long-term view, you can definitely enter the stock at these levels. Let's take some more queries. Sumit Ragani writes to us. He's bought shares of HOEC at 91. He's also bought Bike Hospitality at 186. I want to check what the current prices are for both these stocks. HOEC 101 bought at 91, so in the money. And what about Bike Hospitality? Bought at 186, so slightly below the buy price of Sumit, around 167. Jay, I'm going to come to you for both these counters. On the chart, in terms of levels on the downside or upside, what would you advise Sumit to do?
Well, see, as a distributor, I would say that fundamentally our company has a coverage on bike hospitality, and we have a positive view on that. As technically, when we see that, I would say that 150 on the lower side is a very crucial support, whereas on the upside, this stock has a resistance at around 215. So this stock is trading within this range, Navneet, of 150 to 215. Since it's quite near to the lower end of the range, I would say hold on to this till 150 levels are held on a closing basis. Till those levels are not broken, there is a chance that we might see some bounce back coming in this stock, and he can get some exit above his buying price, or else maybe if at all we see a breakout about 215, then there might be good profits as well. On the flip side, if it breaks 150, then I think the stock is heading towards the levels of 100 as well. So these extreme levels of the range are pretty crucial, going forward, to watch out for whether they hold or they provide a breakout or a breakdown.
Okay, so that's the view in Bike Hospitality as well as HOEC. Let's take our next query, and this one again comes from Manu M. He's bought 600 shares of Lhasa Supergenerics, which he's bought at a price of 104. He wants to know from a longer term perspective, what should he do? The current price is below his buy price of 104, so 97. Actually, it's down nearly 5% in today's session. If I look at YTD returns for this stock, it's down about 46%. It's a company with a market cap of 225 crore. Avinash, do you track this one?
I think, Navneet, this is a very volatile stock, but yes, if you look at the business, they are into the animal feed business, something similar to Godrej Agrovet, and clearly this space has been growing quite admirably, but due to some legacy issues, the company was a part of Omkar Specialities earlier, and the stock is part of the T2T segment, so probably in the next 6 to 12 months, you could find a lot of volatility for the stock, but if one has a 2-year kind of horizon, then one can definitely hold on.
In fact, it's touched its 52-week low in today's session, and the circuit limit is also 5%. Hence, it's locked in lower circuit in today's session of 97. All right, let's move on to some Twitter queries. Then Kaushal Singh writes to us, he wants to invest in Adani Ports with a short-term view, and he's seeking some advice. Well, we all know that the Adani Group stocks have been under pressure in the last 3 to 4 sessions, but in today's session, some did a very mild bounce back, I'll call it, for Adani Ports. Remember, this is also a nifty constituent and one of the better performing companies of the Adani Group. Since it's a short-term query, Jay, at 378, would you advise him to take any trade from a short-term basis?
Sorry, Navneet, if you can come again on the stock, please.
Adani Ports.
Sure. Well, I would say that this stock obviously it has shown a very good performance on the upside, and in fact it has given a good returns as well. But now the stock has clearly broken down from its crucial support levels. It has also broken the 200 DMA, which is generally a crucial moving average. The stock has also provided a breakdown from a falling wedge pattern, which is a bearish reversal pattern. On the upside, the stock has a resistance at around 414 till those highs are not taken off. Now, I think that this stock is likely to see the entire retracement of the rise which we have seen coming right from the levels of almost say 173. I think the minimum of 38.2% retracement will come to around levels of 344. It is expected to fall till those levels. Only 414 on the upside gets taken off, then this view of mine from down to up will reverse. Else, I think the probability of a downside is quite high.
So one should not buy Jay at these levels is what you're suggesting, right?
Absolutely.
Okay, so Jay expects more correction for Adani Ports to come by in the near term, and these stocks have been pretty volatile in the past few sessions as well, so beware before taking any sort of position in Adani Ports. Let's move on to our next query. This one comes from Anshu on Twitter. Anshu wants to invest in Runge with a 2-year view. Why all the retail investors, Avinash, want to buy a stock which is corrected a lot? What would you advise Anshu to do?
I think clearly, I think a stock which has actually come down from levels of, 700-800
It's enticing
rupees.
To buy, but...
So I think, it's better to stay away from this company, not only because, the stock has been extremely volatile. It doesn't give any secular trend. My suggestion is, I think if one were to invest, in most of these e-governance companies, I think it's better to wait for at least a couple of quarters because, fundamentals are not something the markets are closely following in this company. I think it's clearly the management quality and the credibility, because that is something which has taken a big hit in the last couple of quarters. So I think keep away from the stock, and I think probably there are many other good companies where possibly you could get a better risk reward, and you could see your investments grow faster. That's
right, and in fact a bit of positive news from the management did not was not any sort of respite for this company. Remember, they are looking to buy back worth about 1,000 or 1,025 crore. They are sitting on some cash which they want to deploy in buying back the shares. Melvin Morris writes to us on Twitter. He's bought 16 shares of GICRE at a price of 912 with a long-term view. Melvin wants to know if he can add more at current levels. Jay, I'll come to you. Would you advise adding more into GICRE at current levels, or he can look at some other stock?
I think, see, as of now, if someone really would like to add, anything on the buy list, then I would say it would only be the IT stocks wherein we are really seeing sustained up move. Rest all have become quite volatile, and I would say most of them are in fact pointing downwards only. Even the markets, the way they have broken, they have clearly provided a breakdown, and I think IT is the only sector that is supporting the market, or else I would say rather it's immune to the downside as of now. That's what we can see. Then hence I would say buying out IT names like Tech Mahindra or Persistent from the current levels would also provide good returns going forward. Once things settle down, then one can definitely filter it out, which stocks have in fact fallen quite a lot, which are fundamentally good or have retraced quite a lot technically, and there is a good probability of a upside and make higher returns. So I think as of now, just stick to the IT names.
Okay, if somebody wants to make any fresh investment in a market like this, which has been volatile, Jay suggests to buy into IT stocks which have been supporting this market, and he is also advised stocks like Tech Mahindra as well as Persistent. Our next query is coming from Prashant Atari. He's bought 2,000 shares of Syntex Industries at a price of 19.5. He does have a long-term view, and he's asking if you should hold or sell at these levels. The current price is 18, 3.5% lower in today's session, and he's bought at 19.5. Avinash, is there any scope for Syntex Industries to scale higher from these levels?
See, I think in case of Syntex Industries, clearly this is the company which has got formed after the demerger of the plastic and the textile business. My suggestion would be, if the investor has a 2-year view, then only you can hold on, because in the near term, I don't expect any major revival or major earnings trigger for the company, considering the fact that, the last 2 quarterly numbers were hardly encouraging. In fact, margins were under pressure. We believe that only post the expansion, which the company has been undertaking, we could see a revival in the top line and the earnings. So I think hold on for the next couple of years, only then one could get a decent risk reward.
Okay, Prashant, that's the advice from Avinash. If you have a longer term time horizon, say of 1 to 2 years, then you can hold on into Syntex Industries. Our next query is coming from Satya Subash, and he wants to invest in Greaves Cotton, and he has a 2-year time horizon. Avinash, do you track Greaves Cotton?
Yeah, I think Greaves Cotton definitely, deserves a second look. I would believe that, they are largely in the agri space as well as in the engine space, especially the diesel engine space. The company has been performing pretty well. In fact, one setback for the company was a slowdown in the, in the 3-wheeler business. But typically, the company has been making conscious efforts to now get into the agri segment, as especially the agriculture, implements, segments, which is actually growing quite strongly. Our sense is that over the next, say, 2 years, this shift from the 3-wheeler business to the agri business would obviously take time, but it's definitely going to pay rich rewards for the company. So clearly at the current level, the stock can definitely give a decent risk reward. In fact, the management has been clearly stating that as a strategy, agri will now be the next growth driver. So taking a 12 to 18 month view, one can definitely hold on.
Okay, so hold on to Greaves Cotton if you have a view of 18 months or more than that. But in the last 6 months, Greaves Cotton has seen correction of nearly 19%. We're getting a lot of your live queries on Facebook, YouTube, as well as Twitter. Ankit Mishra on YouTube says he's bought 500 shares of Camfin Homes. Remember, this was a stock which was under pressure in yesterday's session. It's also in the futures and options market. He's bought 500 shares at 493. So he's in the money right now, 511. Jay, what would you advise Ankit to do? Should he book his profits or he should hold on?
Well, I would definitely say to book profits if someone is really in the money right now. The reason is, I would say that, see, this stock has definitely given a good bounce back from the levels of 400 till the levels of recent highs of 554, I would say. But then, and interestingly, in this kind of a market, I would also say that this is one of the stock wherein we have seen an impulse move from the way down. That is a 5-wave rising structure, which increases generally the probability that once the correction gets over, there would be next impulse on the way up. This stock has an impulse which increases the probability that it would again provide a breakout on the upside and inch higher. But for that, there is also some confirmation required, that is a breakout above the previous swing high that comes to around 554. Approximately will take 555. So if it breaks about 555, one can again add with a stop loss of say 530, and thereafter the targets would come to almost like 620, 630 from a trading perspective, I'm saying. So as of now, book out definitely, because the stock is facing resistance and it's below its 200 DMA as well. And if it takes off 555 going forward in the near future, then again buy with a stop loss of 530 and a target will be 630. This, I think, should be a good strategy going forward, at least for the short term.
Okay. Ankit, Jay is suggesting right now you book your profits, but when the stock crosses levels of 555, probably that's the time when you can look to enter fresh into this counter. And do keep in mind, markets are volatile, so if you're making any sort of money, the advice coming in from Jay is to book profits. Our next query is from Adit Shah. He also writes to us on YouTube. He is saying he's got 250 shares of Biocon, and his average price of those shares is around 570 rupees, and the current price of Biocon is somewhere 597. He's asking, should I continue purchasing at current levels and accumulate some more, because he has a time horizon of 3 years. Avinash, what would you advise him? Should he buy Biocon, or should he also look at the other pharma stocks?
No, I think within the pharma space, Biocon definitely looks pretty more stable. I think if at all, he wants to look at some other pharma company, Cadila is another good stock to look at. But Biocon definitely deserves, to be looked at, from a slightly longer term angle, considering the fact that the molecule and the product pipeline continues to be very strong, and hopefully FY19 and FY20 should be stronger years compared to the current year. So if he has a long term horizon, I think he should use the current price to actually build into this stock gradually and accumulate it over the next, say, 2 to 3 months, and take a 2-year view.
Okay, take a 2-year view, as Avinash suggests, and you can also look to buy more at these levels. That's Biocon in the pharma space. This year, the stock has given returns of nearly 11%. Before we wrap the show, I just want to pull up Nifty. It's above the mark of 10,200 as we speak. So there has been some bit of buying which is coming in the market, but still it is off the opening levels that one saw in the morning of about 10,241. But remember, the volatility has definitely seen some bit of cool off today. India VIX has been trading with cuts of about 3 to 3.5% around the mark of 15. Well, on that note, I would like to thank both our guests. Thank you very much, Avinash as well as Jay, for helping our viewers with their queries. Well, that's all that we have on this show today. But remember, we're just a tweet, post or a call away. So keep your queries coming, and we promise to address all of them through our shows. You can also log on to BloombergQuint.com, search for #AskPQ, and get answers to all the queries that were discussed on the show today. Don't go anywhere. Power Lunch is up next. Keep watching Bloomberg Quint.